In today's video, we're talking about the rental problem that we have in America. As we all know, rental rates have climbed ridiculously out of control, and Jay Powell, in a Fed press release just last week, said that shelter inflation is at an all-time high as rents have outpaced wage growth in just about every single U.S. market. Many renters have wanted to purchase homes, but again, they're sidelined because of the high interest rates and the already jacked up home prices, making it impossible for them to purchase and pushing them back to sign new leases and find places to rent. This coupled with another problem of very short inventory, and landlords are struggling to pay mortgages and are getting whacked by moratoriums, preventing them from evicting problem tenants. So now let's listen to my sit down with John Williams, a fellow YouTuber, real estate investor, and advisor, as we talk about where we go from here. Hey, John, what's happening, man? Welcome to our show, and just give everybody an overview of who you are.
Hey, what's up, Todd? Thanks for having me. I was a real estate agent from 2009 to 2019 in Beverly Hills, and predominantly represented properties between like 2 and 12 million. And kind of lived very rough and rugged during that time and saved as much money as I possibly could. Saved up enough to where I could invest in real estate and began investing in real estate and left that industry. And during that period, I was also building out a social media following and kind of moving with the trends.
Yeah, well, you and I talk about a lot of the same things, man. I mean, we're just trying to bring good value to our listeners. There has been a massive shift in the real estate market. I think everybody's seen it now. And Jay Powell last week with his, press release talking about how they raised another 0.75, right? 75 basis points interest rate, the Fed rate. And we know how that affects everyone. And we've seen it. I mean, buyers are they're back on the sideline again, which is kind of disturbing for them. I mean, for the last 2 years, they've been fighting to buy a house, getting outbid by cash buyers and competitive, bidding. And now, I think they were having some hopes that, hey, the market's going to turn a little bit. And now all of a sudden, interest rates are jacked up. I mean, 2 times the amount they were just a year ago. And that really brings us to, our discussion today. I mean, John, rents are out of control. Jay Powell just said, and it's called shelter inflation, as far as what the feds refer to the rental market, residential rental market. And they said that inflation is very high. And Powell said that they expect it to stay that way. And so, can you kind of give, you had a recent video, and guys, the link's in the show notes below, but John talks about how nationwide rents are dropping the same as the sale prices. So John, just kind of bring us up to date with some of that and talk about your expectations.
Yeah. So about a year ago, I came out and I was saying, hey, rents are going to fall. And at that time, everyone said, no, you're crazy. Rents are only going to climb. People are going to get priced out of their homes. They're going to be forced to rent. And I'm like, okay, well, I'm selling. And I sold a property at the height. It was like 5 weeks before the height of the market that I purchased for $400,000. I sold it for just under $1.4 million. The rents before I purchased that property in that neighborhood were about $900. And when I left, it was about $2,000. So rents literally increased 100% in that neighborhood. Interest rates were about 2.9, almost 3%. And at that moment, everyone thought that, the moratoriums, the eviction moratoriums would never be extended. And I knew that they were likely going to be extended. I knew rates were only going to be going up. And I knew buyers and renters, they were going to be capped at affordability, especially if we see food inflation, we begin to see layoffs and the economy contracts, there's going to be big problems. I'm selling. I ended up selling the property. And now looking at LA, rents are starting to fall. Rates, like you mentioned, doubled. And we're seeing some really big question marks inside the real estate market right now.
So there's a lot to unpack with what you just said. You were in a good position that you could sell. What I see here locally, a lot of landlords, they were unable to sell because, especially if they had tenants with leases and defaulting tenants where, who wanted to buy or who wants to buy, a rental, property with tenants that aren't paying their rents. We've seen was a lot of stimulus. And I think, one of the biggest controversies for a lot of the landlords that I've spoken to about if they're having trouble collecting rents was that the government was handing out stimulus money and, stipending unemployment, but some of the landlords still didn't get paid. I mean, was the property that you sold were able to sell for what seems like a huge profit? Congratulations on that.
Nice.
I mean, was it empty? Was it multifamily, single family? What type of rental was that?
It was residential multifamily, 4 units.
Okay, gotcha. Yeah. So were they all empty, or did you have leases on them? I mean,
No. So what happened with that property? It initially was a triplex. So there was a duplex in the front, and then there was a little home in the back. And so we bought the property for 420 grand. We put 20% down. We remodeled the front 2 units, then took a home equity line of credit out on the property at I think it was 2.8%. So the loan was good for about 2 years before it would readjust to the market. We used that money. We demoed the back unit and built 2 more units in that place. And then so the rents on the structure went from about $2,000, a little more than $2,000 to $2,000 a unit. So it went to $8,000. And then so at that point we sold it for $1,370,000.
Wow. There's very little inventory out there. When you see that rental prices are coming down, I mean, how do you think this is going to happen? I mean, what do you think is sparking the rental rates declining?
So I think that a lot of people, they thought that if you look at like 2008, 2009, that we were going to see like a similar trajectory in that trend, which is going to be like rents are going to, remain very strong. The big question marks that I had were what's going to happen with the 1.5 to 1.7 million new homes that are going to finish construction over the next year? What's going to happen to all the retirees that thought they had their retirement tucked away and everything was fine? And now they're realizing, hey, that $500 or $1,000 per month is not enough to live anymore. I'm either going to sell my home, I'm going to rent it out. But if I sell it, what am I going to do with the money? Do I really want to sell the property? I'm going to try to hold on to it. So you're going to have, I think, more retirees renting their homes out. You're going to have people that miss the housing market that wish they would have sold, rent their homes out because they need to make good on their mortgage payments. You're going to have people that can't refi their property because they won't be able to obviously qualify, and the payments are going to be too high because the cost is going to be too high. And so then you're going to also have all the new construction, right? So you're going to have all of this new inventory that's going to hit the market for rent, and supply and demand are going to have a really big impact on pricing. So the other caveat there could be, if you look at a lot of rental properties, they're buying them for like a 5% return or 7% return. National rent growth was about 20% over the last 2 years. So if you were just to get back that 20%, you would have so many landlords that would be operating their properties at a loss, right? And so I think there's going to be some really, really big problems coming for leveraged landlords for sure, and big opportunities for investors.
It's interesting what you say, because there has been a lot of operators that have raised a lot of cash over the last couple of years. Mm-hmm. And it's, and a lot of people watching right now, they may not understand, we're going to dive into, this rental crisis really, because if it's not a crisis now, I mean, I have a feeling that John's right. We're going to see where a lot of operators, a lot of these landlords are going to be in big trouble should these rents go down. And there's tons of stuff going on. I mean, the government is, they're capping rate rental increases. This is becoming a big thing. Loans for landlords, if they're not a residential loan, they are only good for a certain period of time, and then they have to readjust. They will refi, and they're going to refi at higher rates now that interest rates all across the board. It's more expensive for non-owner occupied housing than it is for, you buying something to live in. And then what John's saying when he's talking about, returns, profits, it's known as a cap rate. And we're not going to go down that road here today, but basically what John is saying is that it has been so lean. There was so much cash out in the marketplace and so many people, speculating that there would be no end to the rate increases, rental rate increases, that they're not prepared that any kind of downward trend is going to put them in the red and could make it, hard for them to pay their mortgage payments. So, So John, you're saying that you think that with the shift in the home sale or the slowing in home sales across the country, you think a lot of the people that are looking to sell their houses are going to turn that into rentals?
Yeah. So I think there's going to be some other things happening too. To touch very quickly on the cap rate, because I know it's very confusing for a lot of people. And I see people all the time that explain it. and it's like goes over everybody's head. The easiest way, I think, to look at it is if you have a traditional business. Let's say you have a deli shop, right? And you're selling sandwiches. You look at the actual cash flow that you would be earning, the net cash flow that you'd be earning from that deli shop, minus any debts on the or on your business, just the net cash flow. You just divide that number, the annual net cash flow from the purchase price. So it'll give you a little number at the end. It might be 5% or 7%, right? So it's just the net income divided by the purchase price. Now, what's happening right now is the 2-year treasury is about 4.1%. And so that's skyrocketing. So now investors are like, hey, why am I going to buy a real estate deal and get 5% and deal with all the headache when I can just put it in treasuries and print 4.1%? So you're gonna have all this money just flowing into treasuries. Like the real estate appeal is like losing big time. Like for me, I'm in Florida right now, and I think it's kind of funny because I look at all these big, you mentioned like the REIT, raising all the money. I look at all of these investors, and what's happening is that these investors are raising money and buying these deals at a 3 cap. They're buying these deals at a 3 cap, and this 3 cap is going to essentially give them no cushion. And so if you have a situation in which we have an affordability crisis in this country, like we do, they have a really hard time getting by. I mean, the average, I think, cost is like somewhere around $700 per month is what inflation is costing the average household. So if you have an affordability crisis, people are going to move from like the beautiful luxury apartments, right, that saw those huge rent increases to something more affordable. There's going to be more vacancies. Rents are going to fall. Interest rates on those buildings are from 3% to 6%. So if you have cost of debt rising and then income's falling, you have a nightmare problem for those investors, both the people that invest in the funds and the fund managers.
Yeah, it's funny you say, the luxury apartments in all the major cities across the country. I mean, that's what you see. It started out with like student housing. We were sending our kids to college and they're renting these posh apartments with all kinds of amenities, theaters and pool rooms and computer rooms, coffee, wine, wine in the evenings. And so a lot of that trend has been true in standard apartment rentals. They're building these luxury style, amenity rich, very expensive all over the place, all across the country, not just here in Maryland, but where you are in Florida, California, you name it. So I agree. I mean, I think, and the big thing is these operators, and I know a couple of them, they are, you can't promise returns. Mm-hmm. But I know some investors that have invested with some of these operators, and they were really happy with the returns that they've been getting. They're double-digit returns. It's like, wow,
huge,
you're getting 10%, 11, 12% on your cash. And then they were flipping these as well. So they were buying apartment complexes, making them more expensive, by making them more amenity rich. And then they were flipping them. So then some of the investors were getting a part of that too. So I'm kind of curious. So do you think that we're going to see this mass exodus or pullback where people are just going to cut their losses and, let these apartment buildings foreclose?
Well, so the apartment buildings, it's different than like a residential property. A residential property, you're putting your credit score on the line. You're, like personally guaranteeing it. With a commercial deal, they can just walk away. So if it gets to a point where they're not making money or they're losing money, they can just walk away. And so if you look at, the offer memorandums on any of these, like the big guys on social media, like, some of the bigger names, like obviously they have in there if they can't control the future. And so if something happens, they can walk away. And so I'm not saying that they would do anything like that. I'm just simply saying you can't predict the future. One thing we can for sure say is that the world is more uncertain today than it's probably ever been. And so,
you're in one of your recent videos, you spoke about, I think it was almost 10% of the tenants are about to get evicted. What do you think is happening with that? What do you see going on with the landlords being able to evict a tenant that hasn't paid?
A couple of interesting things are happening right now is that this affordability problem that we're in right now is going to be the worst, I think, for landlords, and not just from a point of like pricing power, but in terms of legislation and actions against landlords, because if you look at a lot of the expensive markets, 50-60% income is going towards rent. And so if they can, like they're doing, a lot of rent control is coming up all over the country. Colorado, they're talking about it in Florida. They're talking about housing emergencies. Like they're talking about it in markets where you would think that they would never talk about it. I think the problem could be that they start to enact more rent controls at like 3% cap or 3% increases, but that yet insurance is skyrocketing, property taxes are going up, repair costs are going up, and you're dealing with more people that can't pay. And so if you have a cap on, let's say 3% hypothetically, and then your carrying costs increase by more than that, then every year you're getting penalized for owning the property.
John, just explain to everyone what a rent control means.
Rent control, and I know this very, very well because I've been in LA and I've dealt with my fair share of problems. Because in Los Angeles, they have rent control, some of the strictest in the country. And so what rent control is a set of guidelines that are enacted by local governments that will tell you what you can and cannot do with your property. So essentially, you become the property manager for the state. And so they have things like public counsel and BASTA, which are public networks for tenants that can get free representation. So they can sue the landlord or not pay rent or do whatever they really want without any real consequence to them. Whereas the landlord would have to hire one of the big firms, $300, $400 an hour. And right now in LA, for example, the eviction moratorium is enacted until June of 2023. And I told everybody like 2 years ago, there's no way this is going away. Like this is going to be here for a while. June of 2023, everyone's still working in LA. Like everybody's working, but yet rent's like, as of 6 months ago, 700,000 people were behind on rent in LA County alone.
So you're saying that landlords can't even evict until at least June of 2023?
Yep, they cannot.
So if you have a tenant that's in the apartment or home or whatever, and they're not paying, tough.
Yep, you're out. Yeah. And so like if you look at the average,
there's no subsidy for the landlord at that point? I mean, there's no recourse. No recourse
at all. None. Like I talked to one of the biggest attorneys in LA, Dennis Block. Everyone knows him. He has like 200,000 evictions since like 1980. I talked to him 3 weeks ago. Called his office and I was asking him about, is this true? And he's like, do not buy anything in the city of LA. Do not buy anything in the city of LA. We cannot help you. We cannot do anything. And that's coming from the guy with like 200,000 evictions under his belt. He's been in the business like 30 years. And so you think about it. The average rent's $2,000 a month or 25. It's $2,000 a month in America, but in LA it might be 2,500 to $3,000. Just a year of that. Like you just start adding the number up. It's been March of 2020. So we're going to be approaching 3 years. There's landlords out there that are going to be, and that's, you think about it this way. They can't start evicting until June of 2023. There's 700,000 behind on rent now. By the time you actually saw a judge, it's like 2025.
Yeah. And that's unbelievable what you just said. But on the rent control side, so essentially the landlords are being capped or told that they cannot increase the rents, but a certain percent, I guess, per year, right, to their tenant. How does that affect them if they were under market rents? I mean, I know people that have tenants in there that they've never even rented to. I mean, are they establishing, hey, if you have a 3-bedroom, 2-bath, it should be this much money? Or is it based on what they were paying in previous years or current rent?
So in LA, how it works is that if it's a building, like an older building, before it was like 1980 or older, which is like a lot of LA buildings. I think they increased it now to like, I think maybe 2000 or 1990 something, or earlier, that if you were to sign a lease with them 5 years ago or today, that would be the rental rate and the lease is ongoing indefinitely. And you can only increase it 3% or whatever the state will allow or city will allow going forward. So what happens right now and what we're experiencing, and that's why if you look at LA and you look at New York, is everything is so expensive there because supply and demand. If there's so many people that are getting penalized by moving because, hey, I'm in this apartment for $1,000. If I move, I spend $2,500. They're not going to move. So you have all these people that are just, they want to stay there. And then the only available options are going to be like the newer construction for $3,500 a month.
Yeah, and there's absolutely nowhere for these landlords to go. So if you have a situation where you have a delinquency, issue, and you can't get the people out, you can't even make it up anywhere. I mean, there's, zero room to move in that type of situation. That is unbelievable.
One tenant I had like not long ago absolutely destroyed one of my units, like destroyed it. Like she was absolutely like $40,000 in damage. And I called my attorney and he's like, it's going to cost you more just to try to collect it. And if you even get a judgment, the judgment's only as good as your ability to get that actual money. If the tenant doesn't have the money, you're not going to get it. You're just going to throw, good money after bad. And so I had to take a loss on it, 40 grand.
Yeah, and that is a problem. I mean, I'm a landlord as well. I mean, I've been, landlording for about 25 years. And, sometimes you have great relationships, great tenants, and I found that it doesn't even matter what price point it is. And, and then sometimes you have them where they'll destroy it. And then, I picked up, a house because a landlord was just tired of spending $3,000, $5,000, $10,000 every time a tenant turned over in, reflooring, recarpeting, replacing the appliances because they were destroyed in 2 years. Landlords have been affected since the beginning of the pandemic. Now it's going on 3 years. And not all landlords are good. Not all tenants are bad. I mean, obviously we're, not generalizing the entire industry, but I think we agree that there is trouble ahead. I mean, I think if you're thinking about getting into the rental business, or if you're a landlord and you're struggling right now, you need to talk to somebody. You need to discuss your options with a real estate broker, an attorney, and try and figure out, what is it going to be like here in the next couple months, years ahead. Do you see, a lot of times when a landlord can't get a tenant out, and I got a quick story. I was just talking with an agent, and they have a landlord that they're going to sell this property because the landlord is, can't pay his mortgage payment. And, he's been doing everything he can to keep it current, but the tenant has been late most of the time, has been a problem, whatever. And now all of a sudden the tenant's lost his job. And he basically told the landlord, the property owner, hey, I'm not going to be able to pay you anymore. So you may as well just start to evict me. The tenant didn't say, so I'm going to move out at the end of the month. The tenant didn't say, I'm trying to find a place to live. The tenant said, go ahead. I'm not going to pay you anymore. Start the eviction process. Mm-hmm. It's unbelievable. Yeah. And here locally, I mean, it's 6-7 months,
mm-hmm. You're better to pay the tenant. You're better to pay the tenant.
Well, that's what I was going to ask. So do you see where cash for keys? I mean, in this situation,
oh yeah. In LA, that's like the move. If I had a tenant in LA right now that was not paying, I would be quick to strike a check, because if the tenant's cost me $3,000 a month and I'm not going to get in front of a judge for a year and a half, and I'm going to deal with that person for free and manage the property for free and have to repair the property and deal with all that. If I could get them out for 10 grand, you're damn right I'm going to give that 10 grand. 15 grand I would give it. 20 grand I would give it. Because I'd want that tenant out of there, and I'd want to get it re-rented to sell it, or I would just sell it vacant. But I'd want that tenant out of there. I mean, what is going to happen if you have one tenant not paying and that person's telling other people in the building, hey, I'm not paying rent? I mean, it's like if you see a roach in the kitchen, odds are there's probably another one close, right? It's like, that's what's going to happen.
John, tell everybody how you do that. So, I had a situation where we had a bank-owned property. I represented the bank, and I had to, facilitate the eviction on clearing out the apartments. And it was not fun. I mean, I didn't actually do the eviction. The bank hired the attorney to do that, things like that. But, I had to go around and offer up cash for keys, and it didn't work. I mean, it was like, they wanted the money ahead of time, before they would get out. I mean, so, if you have a situation, or a landlord's listening to this and they're thinking about, I have somebody that's not paying. If I can't get them out for 6 or 7 months, I may want to try this cash for keys. What steps or what processes, how do they do that? You just don't go write them a check for $10,000.
No. So for me, I would always look at the tenant's profile, meaning who is their character? Are they more, maybe some of them are better with talking to a woman. Maybe some of them are better talking to like men. Like some are better talking to, maybe they speak Spanish. Maybe they'd be better speaking to someone that speaks Spanish, right? Having the right person strike that dialogue and then commissioning the person to do the deal. Like you don't, if you have a bad relationship with that tenant, you're not the person to go there and try to strike the deal, because that person is going to look at you as the enemy and not want to do a deal with the enemy unless the terms are extremely lopsided. So I would try to find a way in which you could find leverage and then use that leverage, properly with the right person, the right counsel. Of course, you want to do everything legally. You want to go to the city and get like the correct paperwork and make sure that everything is buttoned up, and you don't want to give all the money up front. Maybe you give like a little bit of money up front, but you give a lion's share when they give you the key. Gotcha. Or you could do like an escrow. You could use like an escrow service that will facilitate the paperwork, and you can give them a commission to do it all.
Yeah. Jay Powell had said that, we had mentioned it earlier, that shelter inflation was out of control. And he had said that in his recent press release that it would be a while before we started to see the rent prices come down. You think that's true, or do you think that we're going to see rents coming down hard and fast like we're seeing home prices for sale come down? And do you think that the government will initiate any type of further regulation with existing rents to drive them down?
I would take anything that they say with a grain of salt. I wouldn't take it to the bank. They said it was transitory, right? 2 years ago. Now they're saying that, like, everything that they say, I'm like, I doubt it. Like, I'll look up all the details and evidence and facts myself, and I'll come up with my own conclusion. Because the last thing that I want to do is take biased information that's there to give like a false sense of security and make people think that, certain things. I would rather do my own research. I think that we're going to see rents start to fall. That's what I think. The next 6 months to a year, we will watch.
Mm-hmm. It doesn't help when they say you can't evict your tenants, right? So if they don't pay you and you can't evict them, that's one way of controlling the rent, right? The landlords go belly up and boom,
Gavin Newsom, he came out last year everywhere, all across the mainstream, like, hey, you don't have to pay your rent. If you can't pay, don't worry, we'll pay it for you. I'm like, that's scumbag. Like, he's going to do that to just push more people to not pay rent, to make it harder for the landlords. And meanwhile, they're sitting with $100 billion in surplus waiting to go buy up property. They already purchased 5,000 units over the last, I think it was 6 months, for mom and pop landlords, right? So like, they enact problems and then they have a response to the problems, which is to buy it up at depressed prices. It's pretty messed up.
So let's give some tips. So, if you're a landlord, you're a mom and pop, and you have rentals, John, what should they be doing?
If it's 4 units or, under, ideally you want to make sure that you have a fixed rate mortgage, and you want to make sure that the tenant in which you're dealing with is someone that is going to be honest and transparent and abide by the contract. And that's number one. If you're looking for a new tenant, I would personally not. I think the biggest mistake a lot of landlords are doing is that they want to get the top price, right? I mean, that's all well and good if you get it. They can sign a contract at $50,000 a month or $1,000. It doesn't matter. It only matters what they're going to do. So I would rather have a tenant that's going to pay a little bit below market that I think is actually going to pay. Or one better is that they can give you a couple months up front as security for the back end of the lease term. And then in the last couple months, then, you can, credit them or credit the money, but have some type of security and make sure you're getting the right tenant. You don't want to step into like uncertainty with a tenant that you think might not pay. And then on the 29th and 30th of every month, you're worrying if you're going to get paid the next day.
Yeah. Great tips. And guys, to add to that as well, don't delay on collecting your rents. I know a lot of mom and pop landlords, they're kind of lackadaisical about it. The first rolls around, their tenant hasn't paid them. They give them to the 5th, the 8th, the 10th, the 15th. The next thing you know, it's not getting paid. Stay in communication with your tenants. Definitely try and keep those airwaves open, know what's going on. And guys, we appreciate it. Look, we are in for a rough road ahead. Whether you're looking to buy houses, whether you're looking to rent, or whether you're looking to invest in real estate, This is going to be some uncharted waters. It's completely different like it was in 2008, but in a lot of ways, it's very similar. One thing for sure, John and I both agree, prices for housing is going to continue to fall. Guys, thanks so much. John, thank you for being on the show.
Thank you.
We'll talk to you soon. I hope you enjoyed that video. If you did, you can hit the thumbs up. It'll let John and I know that you did. And if you haven't already done so, please share us with your friends. Hit that subscribe button and the alert bell to let you know every time we upload content just like this. See you next time. Sachs Realty, Maryland broker number 607720, office number 443-318-4514, equal housing opportunity.